It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, WAAM Talk 1600.
Thanks for tuning in, folks, and welcome back to WAAM Talk 1600's Operating Theater. It's the only OR in all talk radio. I'm Dr. Dave Janda, broadcasting from WAAM Talk 1600's Freedom Bunker. We're hidden deep behind enemy lines, might I say, in the People's Republic of Ann Arbor, Michigan. Folks, we're here every Sunday for you with this show, every Sunday from 2 to 5 Eastern. This show will be up in podcast form due to the brilliance of my wingman, Derek Stone, by 9 p.m. tonight. Now, those podcasts are available for our premium service subscribers. Premium service subscription, 30 cents a day, $9 a month. You can sign up for a month, get rid of it. Not sure why you would, because the information you will never see, hear, read, or experience through the bought-off lamestream fake media. For 30 cents a day, you get the podcast for this show, the podcast from this show since its inception, all of our archives since October 2010. In addition, you have our Insider Insight video interview show that we do every Thursday, my WTF geopolitical analysis show based on information I obtain, information I get, if you will, from my sources within the government have developed over the past 30 years since I was brought to Washington to work on healthcare policy under the Reagan administration. In addition, we have our Department of Advanced Research show, which focuses on IT issues. We have our contributing editor section as well. We have our healthcare briefing section. Again, how to make the healthcare system work for you rather than against you. It's how to do battle with the big insurance companies, big pharmaceutical companies, big medicine like the AMA, how to take them on and how to beat it. All that information is there for you. DaveJanda.com. We have a free public side to the site, but we also have the subscription side. We're there, always on call for you, 24/7. Folks, with this show, every week in our operating room, we dissect current events that are impacting you, your family, your business, our community, and our country. And we bring to our operating room information and guests the bought-off lamestream fake media either ignores because it doesn't fit in their preconceived politically correct bought-off agenda. Because, folks, bottom line, they're petrified. They're petrified of what might happen if they actually tell you what you need to know. Folks, this show is about your freedom, your political, your economic, your financial, and your health care freedom. A couple quick points. We have a YouTube channel, same name as this radio show, Operation Freedom. It is the only authorized channel on YouTube with my original content. I say that because there are several channels that have stolen my original content and placed them on their channels. And frankly, and Operation Freedom is, due to the ambivalence, let's say, of YouTube, is yet to be monetized yet. These channels that have ripped off my original content are monetized. They're getting paid subscriptions. They're getting paid advertisements. Those channels to watch out for. If you see anything on The Truth, I did not authorize it. If you see anything on a channel that they even stole my name, Dr. Dave Janda 2 channel, I didn't authorize it. Even though they stole my name, YouTube refuses to take them down. Beyond frustrating. But I want to give you a heads up because I'm hearing from a lot of people saying, oh, well, how come your videos aren't as nicely presented on these other channels like they are on your own channel, Operation Freedom? That's because we have nothing to do with them. The only authorized YouTube channel for my content is Operation Freedom. And by the way, on that channel, we just uploaded last night. This is because of requests from you, our listeners on this show, a piece that you can share with your family members, neighbors, co-workers about food and water safety and how to protect yourself, if you will, an insurance policy for your food and water resources. And that's up on Operation Freedom for you, free of charge, our YouTube channel. I encourage you to go there. One of the reasons why having some storable food and water is important is because at times there are catastrophic natural occurring events such as what we see happening in the Carolinas and throughout Kentucky and portions of Tennessee with the ice storm that's come through there, whether it's our listeners. We have a huge number of listeners in Florida as well as in Texas with the hurricane issues. Bottom line is having, and the other option for disruptions of food and supply chains, if you will, is not so natural, and that's related to breakdown in financial systems. And we have seen this in multiple countries. Latest being most easily cited is Venezuela. The financial issues are something we need to focus on because, as I've mentioned to you, I believe that the financial markets are not even built on quicksand, as far as I'm concerned. In my mind, I see them almost like vapor. And I can't think of a better person to discuss technically what's occurring in financial markets than our next guest. Every time she comes on, folks contact me and say, how can I learn more about TraderStef's analysis? Well, she's on a great website. She produces great content for crushthestreet.com. I encourage you to go there, crushthestreet.com. A little background on Steph, because her background is very unique. She comes from, if you will, the belly of the beast, the belly of the financial beast. Beginning in 1986, TraderStef initiated a career spanning 14 years within the New York City investment banking industry. She acquired a diverse skill set in human resourcing, technology and communication, training, education and development, business analysis, and global risk. Steph began investing in precious metals in 1999 while following market trends post-dot-com bubble and 9/11. Steph then left the banking industry in 2009 after 5 years in global risk management at Citigroup. TraderStef has developed and hosted a live precious metals hour, if you will, webinar specializing in gold and silver and the mining equities, combined with research of industry fundamentals, financial markets, global news events, geopolitics, and monetary policy, otherwise known as fusion analysis. What is very interesting is that Steph, if you follow what she writes and presents on Crush the Street and through her website, which we'll have her elucidate further, is always ahead of the curve. And what's interesting is Steph comes up with information and analysis. And about a month later, I start to see other people coming up with similar analysis, but not as in-depth as Steph. But they get all the accolades about, one of the first people to identify this. And meanwhile, if you follow Steph, she already picked it up at least a month ahead. It's my honor to welcome TraderStef. Steph, welcome back to Operation Freedom.
Hey, Dr. Janda, thank you very much. You're so kind.
So, Steph, does it get a bit frustrating where your analysis that you present on Crush the Street and through your website, you put out there, and then like some of these big poobahs that are known as big analysts, a month later, almost, I'm not going to say word for word, but they parrot exactly what you had said a month before, and then they get the credit for being the first to get this information out.
Yeah, I know. It reminds me of art school. And it's okay, to a certain extent, because, when you're creating art, being creative, you're always looking at things like in museums and work from the past, and you kind of incorporate that into your own style. So, yeah, but, financial markets, that's another whole ballgame. But I got a lot to cover today.
So let's hit it.
I want to hit your listeners with some really good information. Not so much a focus on the charts, but I will touch on them. But there's a lot going on, so you want me to go ahead and go?
Fire ahead.
All right. The markets, the stock markets in particular, they're not in a full-blown bear market yet. That's really important. They're in correction territory, and they're teetering on the edge. And we'll discuss that in the charts in a few minutes. Things are kind of unraveling, but I discussed that in my recent article, is the stock market plunge, a fork in the 10-year pig party. So, listen, for the passive investor, I want to give advice to both traders and passive investors. And it's just a suggestion. I'm not a financial planner or your advisor. But if you're a passive investor and you're sitting in mutual funds or ETFs, such as like a 9-to-5 job with a 401k plan, or maybe you were a bit more savvy and you played individual stocks and they did pretty well, it is time to consider to take a percentage off the table and sit in cash for a while. You can't go wrong with this. Doesn't mean you have to sell everything, just a percentage, maybe 20, 30, 40, 50%, whatever works for you. A third generally looks good for the professionals. And take any losses that you have before the end of the year to take advantage of the tax reform. And don't forget, the capital gains taxes on profits are lower as well. So don't be shy about taking profits to keep those profits ahead of the fall that looks like may be coming in the market. So there may or may not be a Christmas bounce into the end of the year. And if it does, there's a high probability it'll just be another dead cat bounce. Mm-hmm. And it'll be sold off on the rallies, as we've seen 3 times since the beginning of the year. So now the next bounce, if there is one, it could come close to the highs, but don't count on it within the current geopolitical, economic, and news-driven environment. Remember when you ignored your monthly statements and lost everything in a dot-com bubble? And it took 10 years to just break even before the great financial crisis, and you were probably ignoring your monthly statements then too when the market was crashing? Well, now we're into profit and a heroin-induced money-printing binge and corporate stock buybacks that blew out all the highs since 2000 and 2007 or 8 to a 10-year bull market. And the Fed has admitted this. We've nearly done close to double, all right? So now late in the business cycle, since December of 2015, the Fed's been, punting 0.25% interest rate hikes. So they have ammunition for an economic downturn. Now, quantitative easing pumped those markets, and it's time to pay the piper. So the TaperCaper dance is starting to metastasize. Mm-hmm. And now there's pronouncements and a Wall Street Journal headline that they may make a pause on interest rate hikes. Now, if markets fall further and global uncertainty gets worse and there's more weaponized politics going on in the U.S., and that all continues to dominate the mainstream media headlines before and after the December meeting that's coming up for the Fed, they may not even raise in December, but they may just push it. So it has to get really bad before that meeting for them not to raise in December, but you just need to keep that on the table. They need that ammunition for the downturn, so they may do it. Something really bad has to happen beforehand. Now, for the traders, I need a drink of water.
Fire ahead.
This is not for snowflakes. This is not your father's market and your grandfather's markets, particularly when you're looking at charts. If you had the guts to turn on your PC every morning and take advantage of the volatility before the yield curve inversion, God bless you. But at the same time, you can beat the computers once, twice, 3 times or more, but you cannot beat the HFTs and the algos, the automated traded systems all the time. Eventually, you're going to make a mistake, and they're going to eat you alive. So if you got rules or a system, you need to stick to it. Don't wander off the plantation here. I know seasoned traders who are making rookie mistakes, and you cannot do that in this market. If you are not on your screens every second, you must have automated stops. Despite that, when you do that, the algos see what you're doing. But in this environment, if you're stepping away, you need to have a stop in. Now, it's a Jack be nimble, Jack be quick environment. Things are rotten in Denmark. We got the Britain's planned Brexit, making on the rocks from the European Union. Italy's banking and debt issues are a mess. Germany's Deutsche Bank stock price is now at all-time lows this week, and they are a major systemic risk to the markets. We have riots in France over taxes and the cost of living and the globalist agenda. China's economy is taking a hit, plus the trade war ramifications. Russia is pushing buttons against the Ukraine and Crimea. They rammed the Ukrainian military vessels and arrested the sailors. And Saudi Arabia issue has not yet went away because of the killing of Khashoggi. That's still a fork in the works because that has everything to do with the U.S. dollar and the petrodollar system, which is keeping the U.S. dollar propped up as the reserve status. If that falls through, Katie bar the doors. Now, of all the indicators in the economy, the jobs numbers are the most lagging indicator. The claims are not, it's not just General Motors aberration because they want to lay off 1/3 of the North American workforce. Layoffs last year were averaged 35,000 monthly. In the last 4 months, they're 55,000 a month. That's up 28% year over year. There's reduced demand in manufacturing products. The housing sector's slowing. in key markets, mind you, hotel reservations are falling off a cliff. Global auto sales are plummeting. The back-to-back down revisions in economic numbers are a telegraph that there's an inflection point in the economy coming. And along with that, the yield curve inversion on treasuries and bonds, the Fed is considering a pause in rising rates. Now, the metrics back in 1999, when the inversion happened, we went immediately into a recession.
Right.
There was like no pause in between. Mm-hmm. If you look at what happened during the Great Recession, we had almost 24 months before we actually fell into a recession prior to after the inversion happened. Now, look, it's the new normal 800-point swings or 1,500-point weekly spreads in the Dow with stunning rips up and down on an intraday basis. We've never seen anything like this. Look, it wasn't even like this during the run-up to the Great Financial Crisis because the swings were muted compared to what we're seeing now. It's just very different. So seasoned traders with multiple decades of experience, guys that were doing it 20 years before I even thought about it, from the Chicago exchanges, the New York Stock exchanges, hedge funds, some who started their own businesses with the takeover of the automated platforms, versus open cry pit trading, they're getting wiped out financially in one day on one trade.
But Stuart Varney on Fox Business News and all the folks on CNBS say everything's fine, Steph.
Everything's just wonderful, and it will be if they start printing again. But that'll temporarily put the Band-Aid on the wound, but then the wound's going to get bigger. So, bottom line, if the vast majority of folks that listen to this show have 401ks, IRAs, some investments on the side, stock bonds, you mentioned early on, not a bad time to step away from the table a bit. It's always prudent to take profits and preserve your capital.
So where should folks be? You mentioned cash as an option. Many folks that listen to this show also believe in, if you will, sound or money that has held its value for the past 5,000 years, that being precious metals such as gold and silver. What do you say about the precious metals markets at this point? Because many people have been frustrated by them.
Well, the dollar is kind of a focus. And over at CrushTheStreet.com, a little push here, with a forward slash at the end of that and the word dead, there is a little piece they're putting out about the U.S. dollar. I think that's important to read because that falls into gold. But I would first like to just say a couple things about the stock market charts before we hit gold.
Let's hit that.
The Dow, it hasn't hit that trend line going back to 2016 yet. But it's only 1 week away in a spread of 1,500 points where we could be kissing that line. And if it takes out that line, then we're in a full-blown bear market.
What is the number on that line that folks should watch out for in the coming week or weeks?
As time goes forward, the number changes because of the nature of a line, because it's a diagonal line. Mm-hmm. Now, but the horizontal line that you probably want to watch, we're talking like right around the between 23,000 and 23,500. Okay. That's the number. That's on the Dow. Now, if we look at the S&P 500, which is a better indicator of where the economy is going and what's going on, because there's 500 stocks in it instead of 30. Right. The price is sitting on that 2016 trend line already for the past 3 weeks. So one more move down, everything else could follow it. All right. So that's real important. And then we got the NASDAQ. Basically technology. That hasn't hit that trend line either, but it's getting close. It's a little closer than the Dow is. Mm-hmm. So, keep an eye on that 23,005 on the Dow, and keep in mind that the S&P is already there. Not the same number, but it's already at that inflection point. Mm-hmm. So gold. What's up with gold? Back in the financial crisis, gold fell, but it rose initially as the Dow was plummeting, and then there was a taking off of the table because people that were in the markets needed cash to cover margin calls. Then gold picked back up. So when all was said and done, from October 2007 to March of 2009, the Dow was down 7,728 points. from the beginning of that move, gold ended up to $186 per ounce. Not at 286, but up 286.
Right.
So, right, gold held its value. So keep that in mind. That little fall may not happen this time around. It could just take off and not really have a correction.
Now, is that because many of these traders never diversified back into gold and silver and precious metals because they've been pushing on the the FANG stocks and the like?
That too, but the markets and the environment that we're in is much worse and much more favorable fundamentally than it was back then. So much better. It just has gotten better every year. But if we look at the gold monthly chart, on November 30th, I put out an article, and you're looking at that monthly chart, and I suggest if we take out that 50-day moving average, and we put in record volume last month, and we were sitting at the 50, we took it out in early December. But I had put out a sweet spot alert earlier in the month, on November 20th, and I suggested that we were having another sweet spot coming. That's what happened, because there was this formation called the Swiss stare. And it just says that there's accumulation going on for a few weeks, and it was really pretty. Now, it corrected a little shallow by like $25, I think. Then it took off, took out the trend line, and now we're back up in the 1250s. But now we're at another important area of resistance. So I put out another alert like, look, it doesn't matter whether you're a swing trader long-term or near-term intraday. Now's the time to think about what you wanted to do before we went into the weekend. Because we may get a little pullback and then go back up. Or it might just take off. We just don't know because of the resistance level. So taking some profits off the table here might have been a good thing, too, if you were following the sweet spot alerts. But that 1250 really needs to be taken out with a lot of oomph if we're going to get back up into that the high 1300s.
And if that 1250 is taken out, you mentioned it could take off.
Well, back into where we were
before
earlier in the year, before we got the slowdown through the year.
Steph, earlier in the interview, you spoke. One of the issues you spoke about being troublesome is where Deutsche Bank is, the largest bank in not only Germany, but isn't it the largest bank in Europe? Yeah.
You got a major derivative and debt problem going on, and a lot of corruption in court cases and fines. It's just a mess. And that bank is really important systemically to the financial system.
So as many people might be listening say, well, what do I care about a bank in Germany for? Okay, so it's the biggest bank in Germany. So it's the biggest bank in Europe. Well, actually, and tell me if I'm wrong, because you're the pro on this, but it's my understanding Deutsche Bank has ties to almost every major financial institution in the world, or every major financial institution in the world has ties into Deutsche Bank. Am I wrong?
Yeah, everyone's pretty much tied to everybody. Deutsche Bank, just with regards to Europe, holds a special place. Let's just put it that way. And they're in Germany, which is the strongest economy in the European Union. If it wasn't for Germany, the European Union wouldn't survive.
So Deutsche Bank, you mentioned, is hitting new all-time lows.
Yeah, it's down in the $7 and $8 range, depending on which currency you look at.
I guess forewarned is forearmed. Steph, how can folks follow you? Because they need to follow you on a very regular basis.
TraderStef on Twitter, or go to crushthestreet.com under the moniker TraderStef, and you can see my articles, which will link you back to my personal website.
Steph, I'd like to thank you for everything you have done, are doing, and will do. You're an incredible knowledge-based resource on the facts. I have to say, there are many times you say something, and you know when we go back and forth, and I'm like, oh, Steph, please. And sure enough, Steph is always right. She'll tell you what you need to know, and it might not be what you want to hear. Folks, you're listening to Operation Freedom. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at WAAM Talk 1600.